Now, a lot of publications have said that sooner or later, China will become the largest economy in the world. Now, let's see exactly how much sooner or how much later. Is it going to be 2050, 2040, or 2030, or when? Take China and US GDP for 2007. We know those figures. And make three relatively conservative assumptions. Assume the US GDP grows at 2.5% rate. Assume China's GDP grows at a 6% rate. So we're not talking 13 or 11 or 9, but 6, much slower than the last 10 years or 20 years. Assume that the Chinese yuan appreciates vis-a-vis the US dollar at, say, a 4% annual rate, significantly slower than what many economists are calling for. And you do the math, a task very easy for this particular audience. You may already have done it. And you look at the numbers. 2025, based on these three simple assumptions, is when China's GDP catches up with the US. Now, let's look at another 25 years and see what happens. Assume China's GDP grows at 5%, not 6. Because remember, in 2025, if China's GDP is equal to the US, its per capita income will still be 1/4 of the US. So therefore, still, it would have a few more decades of reasonably decent growth ahead of it. Assume US grows at 2.5, China grows at 5. Assume no further adjustment in exchange rates. 2050, China's GDP is twice that of the US. India is trailing China by about 12 to 14 years. And that's basically the gap between 1978, when China started liberalization, started embracing globalization, and 1991, when India jumped onto the same train. Therefore, it's not unreasonable to predict that could it be by 2050, China and India, in terms of GDP, in terms of economic size, in terms of the market size of most products and services, could be as large or even larger than US, Europe, and Japan combined. If that's the kind of reality we are talking about, essentially, we are talking about a paradigm change in terms of the structure of the global economy, and it's happening at a very rapid rate. And so therefore, in terms of having a suboptimal China or India strategy, becomes increasingly precarious, risky for companies. Picking up the same point from a recent report by the US National Intelligence Council, talking about the shift that's taking place, global shift in relative wealth and economic power, now underway roughly from west to east, is without precedent in modern history. The rise of China and India essentially is not a novel phenomenon. It's a back-to-the-future story. Very briefly, just to look at the picture, that for much of recorded history, these two economies were the largest, and by the standards of those days, among the most advanced in the world. As recently as, let's say, early 19th century, these two were about 50% of the world's GDP. What happened in the 19th century is industrial and technological revolution that made first Europe and then America rich and totally passed China and India by a whole variety of reasons. Clearly, imperialism, colonization being part of the factors that made these countries turn from giants into pygmies. And what's happening today is that delayed industrial and technological revolution. Capital and technology move a whole lot faster now than they used to in the 19th century. So it's not a surprise that what took 100 years to transform the structure of the global economy in the 19th century might now take only 20 to 30 years. So that's the picture that we are witnessing now. Let's look at the current reality, the current economic turmoil, and how is it affecting China and India. And this is the latest and the most credible data we have right now. And for all one knows, it may get revised in another 2 weeks. But this is IMF World Economic Outlook, updated on January 28, 2009. Every major economy, every developed economy is mired in a deep recession. We know that. Now let's look at what's happening to China and India. Last quarter of 2008, those figures are in, or at least, let's say the estimate for last quarter 2008 are in. China grew at 6.8%, India grew at 6.7%. The projections for this year, 2009, are significantly slower than the reality of 2008 or 7 or 6 or 5, etc. But still, the 5 to 7% growth rate projected for China and India in 2009 or 2010 would be the envy of the developed economies, even in the best of times. And actually, if you look at the numbers, the 2009 will accelerate actually the pace at which China and India close the gap in terms of GDP between their size and the size of the bigger developed economies. So the China-India story continues to play out even in the current economic recession. Of course, this is an integrated global economy, and in a situation like that, a significant downturn in exports or the growth in exports hits both China and India hard. But the economic growth of these two economies is fueled not just by exports, which is an important part, but actually even more heavily by increase in domestic productivity, increase in domestic investment, and increase in domestic consumption. And those stories have been relatively less affected or relatively unaffected by the global economic crisis. Looking ahead, and I like to see each of these economies as four stories, each strategically compelling, all be playing out at the same time. There are other economies like Japan, Germany, of course, US, that reflect or that feature one or two of these stories. But there is no economy other than these two that features all four at the same time. So let's look at what I mean and why do I say that.